Welcome to XM.com for this Forex Preview video. I'm Cristina Marujas. Joining me today is investment analyst Cristina Barcenido. We'll be taking a closer look at the non-farm payrolls report out this Friday. Cristina, Friday's NFP report will be the last one before the U.S. presidential election on November 3rd. What is the data expected to say about the economy, and how could this affect Trump's position?
Hi, Cristina. Well, the report is not expected to be much surprising. And what I mean by this is that after the unemployment rate reached a record high back in May, it has been declining since then. And the reason behind that, of course, is the massive stimulus the government and the central bank provided to the economy to help businesses rehire those who were forced to stop working and support spending. Of course, the unemployment rate remains well above pre-COVID levels, and we still have some way to go to reach normal levels, which could take some time because we still have some restrictions on business capacities, and generally the global economy is not efficiently functioning because of COVID-19. But something is better than nothing, and the fact that the unemployment rate is gradually heading to the right direction is positive for the economy and for President Trump, of course. The unemployment change could be positive but weaker at 850,000, though I don't think this is a worrying sign as long as the jobless rate is declining. Actually, this could be a sign that less people remain in the waiting list to get rehired. However, we shouldn't celebrate the numbers yet because the autumn-winter season is still ahead, and a third, more serious wave of infections cannot be ruled out. For example, if hospitals get full, forcing the government to shut down the economy as it did in spring, then probably we may get another strong rebound in the unemployment rate. So maybe the coming releases could be more discouraging, especially if the Congress doesn't approve another pandemic package extending the unemployment benefits which have expired in some key states. But this still remains to be seen.
And now let's turn to the FX markets. The dollar has been underperforming against the euro so far this week. Could it correct higher in the wake of the data?
Well, for that to happen, I think the unemployment rate should surprise strongly to the upside and show a more encouraging employment change than the private ADP report, which is expected to be released today. But given that political uncertainty in the U.S., which is heading to the polls in 6 weeks from now, I think that investors could turn more cautious about the dollar. Markets are mainly pricing in that a defeat for Trump could pressure the dollar, but the first debate with Biden on Tuesday didn't provide much direction on who could win the election. Nevertheless, I think that no matter who will be the next U.S. president, the ruling party should also gain majority in the Congress to be able to pass laws. Otherwise, we may have more budget debates, and if public debts get out of control next year, then even Trump could tighten policy and increase taxes, pushing the dollar lower. Moreover, if we finally get a vaccine soon, that would also be somewhat negative for the dollar because it would lose its safe haven feature. From a technical perspective, euro-dollar has confirmed a bearish trend pattern in the daily time frame, which is positive for the dollar, but we saw some recovery recently, and unless the pair doesn't extend above 1.1870, I don't think that it would remove negative risks for the euro.
Cristina, thank you very much for joining me today. This was a Forex Preview on non-farm payrolls report out of the United States on Friday. Thanks for watching at XM.com.